Trading red folder news events can either be your worst trading day of the month or the best, depending on how you approach the markets. Now, we're going to break this down in detail today. How can you actually capitalize on these red folder news events so you guys can stop trying to predict the actual candle and wait for the market to show its hand so you can utilize some good entries. We don't need to predict the candle. We just need to follow the steps that we're going to discuss today. So starting off, we are always going to use the 1 minute time frame for our entries. We're going to use the 4 hour for the directional bias. And to actually place the trades, it's always going to be on NQ. Now we also have ES pulled up to the side here to find divergences, which is also known as SMT. So we're going to break that down as well a little bit later. But starting off, the most important thing here is the actual window I was trading was only valid because we had 8:30 red folder news based on New York's time. Okay, so this is super important. Time does play a big part in how I approach the markets, utilizing the macro windows only. So the macro window that we were trading today is the pre-market open macro from 8:50 till 9:10. And of course, we do add 5 minutes before and after for any additional possible entries. Okay, so this is only valid when we have red folder USD news, which we see has actually impacted the market, increasing the volatility to actually increase our likelihood of succeeding in a trade. So starting off, let's go to the bias on the 4 hour time frame. This is fairly simple. Stage one, we're always going to mark the low and high of the previous candle. If we sweep the low, we're going to look to buy. If we sweep the high, we're going to look to sell. Now, because this is only stage one, the second stage is to mark out the closest bearish and bullish PD rays, which are fair value gaps and inversion fair value gaps. Whichever one comes first, you're going to mark that first one out because we need to know where's there going to be buying or selling pressure. So here we see that price has swept the low and tapped off a bullish fair value gap. This was why I was actually bullish coming into the market. But most recently, what have we done? We see here, if we look to the left, this red box is a inversion fair value gap that is bearish because we had 1, 2, 3 candles leaving that area of inefficiency to the upsides. Price is trading back into it multiple times, using it as a bullish fair value gap. And then this candle here, 27th of February at 6 o'clock, this placed beneath the bullish fair value gap, making this an inversion. And we can treat this now as an area of where we can look to sell. So this is important. Whatever's happened, whatever price has tapped into on the 1 minute most recently is the direction we're going to look to take. So yes, we've taken the low in a gap, but most recently we've touched this bearish inversion fair value gap. So I'm only interested now in looking to take selling positions. Okay, this is super important. Make sure you actually listen because this will cost you a lot of losses otherwise. So we discussed the direction. The next step, because we are trading pre-market open, is to mark out the data candles high. I don't want this to get too messy, so let's color this in green. So the data high and the data low of the news release candle at 8:30. What we're going to do, when price sweeps the low, we're going to look to take buying positions if we're in line with the bullish trend on the 4 hour. And if we take the high, we're going to look to take selling positions. Both of these have a 90% chance of being swept on the day. So because we are bearish, we want price to sweep the 8:30 candles high. And now we're ready to look for selling positions back to the downsides. So this is fantastic, right? Everything's aligning of why we should be bearish. But let's just go and grade our setup slightly better by utilizing midnight open and the 8:30 opening price as well. Starting off with the midnight, if you remember on the last video, all you're going to do is come to the opening day's candle and you're going to mark out the actual open of the candle. So this is based off New York time. So just do the conversion. You can come down here where it says UTC, change it. I'm in London. Well, my time is in London. I live in Portugal. It's the same time, but just do the conversion. 000 is the midnight opening price. It uses this as support and resistance throughout the whole day. But we like to use it to figure out if price is cheap or expensive. So if we're beneath both the 8:30 and the midnight, because 8:30 is the same, you mark out the open. If we're above both, the day is super expensive and we can look to take selling positions. If we're beneath both, we're super cheap on the day and we can look to take buying positions. Now, I don't use this as my directional bias alone, but I do use it for an additional grade. For example, if I'm taking an A setup, I can make it A plus if we're beneath or above both these levels. Okay. Now we see that my entry was around, where was it? It was here. So let's move it. Actually, we'll use the replay tool. Why did I enter where I entered? Now, this is fairly simple, to be fair. We see that price, oh, I forgot to discuss the SMT. Super important. Price has actually taken the high on ES, these double tops, these equal highs, sorry. ES made a lower high. Now, ES, in my opinion, is the stronger asset. So if ES makes a lower low, what are we likely to do? We're likely to continue to the downside. This is a fantastic tool, this divergence, SMT. If you find it, your setup is instantly graded a lot higher, especially as we're looking to take a reversal here. This is a fantastic confluence. So we are super bearish right now. We're in the time, we're in the macro. The exact entry reason was because price, I need to start you from the beginning. Price has displaced slightly through this low here, but what I was looking at was price has inversed this bullish fair value gap. So what I was looking to do, I didn't really pay too much attention to this until now. So what we see here, price is traded back inside this inversion fair value gap. And if you look ever so closely, we actually leave a volume imbalance indicating sell pressure. Now, sometimes I'll execute straight away. In this instance, I missed this position. So what I thought I'd do, I would wait for price to return back to the volume imbalance, which is inside an inversion fair value gap. If you look at my continuation model, we can take these on the retest or the open. So in this time, I placed a sell limit here. 10 points would be above the inversion. Very safe stop loss. And let's just play and see how price slowly made its way down, but then we did come back. I was getting a little bit of FOMO, but then we do come and tag me in. Where is it? Okay. So on this candle, I literally just got tagged in. We ended up securing a 0.5 and then price hits my break even. Stop loss, 10 points. Take profit was the data low. So in days like this, when you trade in news events, just target the data low or the next protected low. A protected low is a low inside the fair value gap, which is the lowest point. It can't just be any of these lows. These have been swept anyway, but the lowest point holds the most significance and it's the strongest pool. So we see I've been tagged in. Still now I'm break even. I secured a 0.5. This volume imbalance, I was very tempted in stacking some positions. And then price came back inside the CE of this inversion fair value gap, also a BPR. So I should have actually held my position, but because price is a little bit too choppy for me, I secured a 0.5 and then the final TP was hit. What a fantastic trade. I'm going to post more updates like this. Any questions, do let me know down below. I graded this actual entry B+, the exit fairly A+, because we've got data lows, which is also protected low, the time frame A+, the direction and A. So if you do like this, I'm going to post more of these. Thank you guys for watching.